Financial lessons I should have learned in school. Taxes. Welcome to Lesson 2 in our Financial Lessons tax course. In this lesson, we will discuss income. Taxable income is the second consideration that needs to be made when determining tax liability. Taxable income is determined after adjustments and deductions are subtracted from your gross income. Income is any money that you make in any form. Some of the types of income are here listed on this slide. The first is W-2 income, and this is income that is earned from an employer. So if you are employed by a company or a business, then you are receiving W-2 income. And if you've been employed for several years, then I'm sure you've gotten used to receiving a W-2 at the end of your tax year that lists all the money that you made as well as the taxes that were paid or taken out on your behalf. But there are many different types of income. Income that is collected miscellaneously on a 1099 form, unemployment income, investment income, dividend income, as well as gambling winnings, cryptocurrency sales, or stock sales. If you have any doubt about money that you've earned or made, and you're wondering whether or not it's going to be taxable income, make sure that you reach out to your tax professional to determine whether that increase is income or not. There are different types of forms that income is reported on. As we talked about on the last slide, we have W-2 income, which is where you work for an employer as an employee. It is the most common type of income, and we can see an example W-2 here on the bottom left of the screen, where the income is listed there, how much they made, as well as how much they paid out in taxes. There are other important information listed on a W-2 as well, such as retirement contributions that were made on your behalf through your employer. But we also have 1099 forms, and those are also very common to use for Social Security benefits, cancellation of debt, retirement distributions. So there are different types of 1099s based on the type of income that's being reported, but it is the second most common type of income form, and you can see an example of one here. In addition to these two, we have bank statements. If you own your own business and perhaps you're not using some sort of tax software, your bank statements are going to be the most important income form that you're going to use and present to your tax preparer when it's time to file your taxes. But if you are using a form of software such as QuickBooks or Stessa, you're going to want to download those files and use those as well when it's tax time and time to report the income that you earned over the tax year. Some people also have rental home income, and those statements would be important as well. Now, we have 3 different income categories within a tax return. We've talked a little bit about taxable income, but I wanted to go through those 3 types that you're going to see on a common 1040 form, which is the form we see here on this particular slide. And it is the tax form that is used most often in preparing tax returns for individuals. At the top there, you can see those filing statuses that we talked about before that dictate a number of things on your tax return. At the bottom, you can see highlighted in yellow the 3 different categories of income. The first being total income, and this is your combined income. If you are an employer or an employee rather, and you have W-2 income, that would be considered. And let's say you also have a side gig driving Uber or doing DoorDash or something like that, or even your own business if you are a sole proprietor or a single member LLC. and you have that income here. Maybe you had some IRA distributions throughout the year or some Social Security benefits. All of those would be recorded here and combined together to equal your total income amount. The next is your adjusted gross income. So there are adjustments that can be made if you meet certain criteria. So if you are an educator, for example, and you had educator expenses, those are considered an adjustment, but there are many others, and we will get into those more in a subsequent lesson. But once you have those adjustments, they are subtracted from your total income to give you your adjusted gross income. Now, your adjusted gross income can be very important, especially if you are seeking to buy a house or make some other type of purchase where you need to seek the help of a loan from a financial institution. They will ask you what your adjusted gross income was. This is the number that they use most often, and it will be listed on your tax return. So a lot of times they'll ask you for a copy of your most recent, or maybe your most 3 recent tax returns to get those numbers. And that is the income that you have after subtracting those adjustments. Now, the final one, the one that we've talked about, the taxable income, which is where taxes are calculated on based on those filing statuses. The taxable income is reached after subtracting deductions. And so deductions would include charitable contributions. They could include mortgage interest. If you are buying a home and paying a mortgage on that home, the interest is deductible. If you're choosing the itemized deduction route versus the standardized. And once those deductions are subtracted, that gives you the taxable income. If you're taking the standard deduction, that is determined by your filing status as to how much that standard deduction will be. And we'll talk about that more again in a subsequent lesson. In our next lesson, we're going to discuss how to offset the income and lower your tax liability through adjustments, deductions, and credits. And in summary here, any money received is income, most of which is taxable. If you have questions, seek out the help of a tax professional. The second thing is, make sure that you are keeping your tax income forms in a safe place so that you're able to present those when you are ready to prepare your returns or have them prepared by a professional. I would recommend, as they come in, to scan those documents. There's some really great scan apps that you can put on your cell phone and take a picture of it and save them in a folder. Because if you lose the document, sometimes it can be very difficult to replace them. So I always recommend that to clients, to keep them physically, but also keep a digital copy in the event that those papers get lost. And then finally, there are 3 types of income included on the tax return that you need to be aware of and what they mean. The total income, which is your combined income. The adjusted gross income, which is your income once those adjustments have been made. And then your taxable income,